What changes will interest rate hikes bring to our lives? Interest rate hikes go beyond simply increasing bank interest. They significantly impact our entire lives. It's especially crucial to understand their direct effects on our salaries and assets. 1. What are interest rate hikes? First, let's briefly define what interest rate hikes are. Interest rates refer to the cost of borrowing or lending money. When a central bank, like the Bank of Korea, raises its benchmark interest rate to stabilize prices, commercial banks' loan and deposit rates also tend to rise. It acts like an adjuster for the economy. 2. Impact on salary. It looks the same, but it's different inside. When interest rates rise, your salary amount itself doesn't immediately decrease. However, the real value, or purchasing power, of your salary can change. Increased burden of loan interest. If you have variable rate loans, such as mortgage loans or personal loans, the interest you have to pay each month will increase due to the interest rate hike. This means more of your salary will go towards loan repayments, ultimately reducing your disposable income available for living expenses. Reduced corporate investment and employment. When interest rates rise, the cost of borrowing money for companies also increases, which might make them hesitate to make new investments or expand their businesses. This could lead to a slowdown in employment or lower wage increase rates. If the economy slows down, overall consumer sentiment might also weaken. In conclusion, even if the amount of money deposited into your bank account remains the same, the increased outflow of funds or reduced potential for future income growth can change the perceived impact of your salary. 3. Impact on assets. Fortunes vary by asset type. Interest rate hikes have complex effects on the asset market. Fortunes can vary depending on what assets you hold. Deposits and savings. This is the area that receives the most direct positive impact. As bank deposit and savings rates rise, you can earn more interest on the same amount of money. This can be a good opportunity for those seeking stable returns. Real estate. Interest rate hikes increase the burden of loan interest when purchasing a home. This can reduce demand for home purchases, which in turn can slow down or even lead to a decline in real estate prices. The burden can be particularly heavy for investors with high loan ratios. Stocks and funds. When the interest burden on companies increases, their profitability can worsen, which may lead to a decrease in stock prices. Furthermore, as investors tend to shift their money from risky assets, like stocks, to safer assets like deposits, which now offer higher interest, the overall stock market may experience weakness. Bonds. Generally, when interest rates rise, the value of existing bonds tends to decrease. However, newly issued bonds offer higher interest rates, so if you're considering bond investments, you might want to look into newly issued ones. Virtual assets. Cryptocurrencies like stocks, these are classified as risky assets. So during periods of interest rate hikes, investment sentiment can weaken, leading to greater price volatility. As the preference for safer assets strengthens, capital outflows may occur. 4. Why are interest rates increased? Interest rate hikes are primarily used to curb inflation and cool down an overheated economy. Additionally, a major reason is to prevent capital outflow in response to interest rate hikes by countries with reserve currencies, like the United States. If the U.S. raises its interest rates, money might move to dollar-denominated assets in search of higher interest, putting pressure on Korea to also raise its rates. Summary: interest rate hikes can lower the real purchasing power of our salaries and increase the burden of debt. In terms of assets, deposits and savings become more favorable, but assets like real estate, stocks, and virtual assets may experience increased price volatility or decline due to weakened investment sentiment. Understanding these changes and wisely managing your assets according to your financial situation and goals is crucial. If you have any more questions, please feel free to ask anytime.